Alrighty, I think we are officially live. Thank you everyone for tuning in today. I'm not going to make it a super long stream, but I kind of wanted to get myself out there, maybe give everyone a little introduction as to who I am and why I'm actually doing what I'm doing, right? So, I came into crypto back in 2015. Seems like ages ago. I know it was like 10 years ago, whatever, but I came into the whole crypto world. I actually remember the day. It was like January 2nd of like 2015, and heard about it from a friend. And from that point on, I think I was a little skeptical, but I mean, I got wrecked at first. I got into the whole ecosystem when Bitcoin was like 250 bucks. And thinking about it now, I think I sold it. It took like a 175 dip, and then eventually bought it back in like $300 higher than my initial buy. So it was like a little bit of an eye opener. I kind of hated fucking crypto at the time, but I got in eventually, and I started I guess following my gut on what it was actually offering, and the benefits for the world and everything like that. Free money, yeah. So I was interested in a lot of that. And then I eventually got into Ethereum, programmable money. That excited me. And then a lot of tools can be built on top of Ethereum. And fast forward, until I started eventually getting into Richard Hart's self-help books. I know he was doing a lot of content, on YouTube. And I guess that's what got me into Hex, as a Hex fanboy, joined the cult. And I think that since that time, I would say since 2017 is when the DeFi really started kicking in, and you had all this opportunity for, to make some yield, to make some gains out in this world. Instead of just buying and holding and then selling. Now I think there's more opportunity for us to get involved in things that are being utilized in the real world. Those financial instruments in, TradFi, traditional markets, bring it to the crypto world. And I think that's what, I want to talk about today, because I think that it's long overdue, especially considering I've been documenting my journey along the way, especially with a certain type of protocol. And, I wanted to share that journey. So before we go anywhere, though, I do want to go over something about Bitcoin. So if you're curious about the markets, I kind of wanted to dive into that a little bit. So there's a crypto fear and greed index. So I'm sure many of you seen this, but this is one of these charts where it's kind of interesting, because number one, Bitcoin kind of has been farting around in this central zone all year, right? And recently, I would say back in April is when it touched this extreme fear level, and the price rebounded, and we'll go to the second. But it actually hit it twice, in April, and then the last one, which is in November. It hit it twice, and then I want to show you what the price has done. So it's, we could speculate a little bit, especially like seeing what's happened. So I kind of mapped it out a little bit on this graph, and I'll explain it to you. So on this chart, here's where this pink circle is. That's where the last touch was back in April. And since that time, it made a 70% jump. And now it's hit it again, so we could speculate, hey, is it going to rebound off the bottom? Up to 70%, maybe. I mean, I'm not really sure. It's hard to say, but it did bounce from that extreme fear level, and now it's, it's coming back. I think the market's got crushed today, but, it's coming back a little bit. So it's worth keeping an eye on going forward. I mean, I don't really know where this market can go, but I mean, I like using the horizontal trend lines. Aside from what we're looking at here, I do like using these long-term horizontal trend lines. Let me zoom out a little bit. Look at a higher time frame. Like this one was crazy. When this one broke, that 6K, 7K to 3K real fast. This one was like the start of, hey, like we're going to have to draw some new horizontal trend lines, because it's making a new pattern. And then this horizontal trend line going across is being respected pretty much, to the T. And it even came up and touched the old support level from the past, and then came back down. And now, we'll have this support. I think this support line eventually gets touched, by the way. So whether it's, over here, it could be somewhere in this zone over time, maybe like during the bear market, maybe in 2027, maybe late 2026, but I think this is too low. I think it'll touch it somewhere, maybe 3-4 years down the road. So I don't know. I used to be a trader back in the day. I used to trade Forex. That's actually how I got into crypto, because my friend told me about digital currency, and he was telling me about, hey, why don't you trade digital assets? It's like digital money. And I'm like, the hell are you talking about? So that conversation got me into the whole crypto talk with him. So, for what it's worth. But today, I want to go over a platform, PlusX or LPX. This platform is so undervalued, and I think it's under the radar so much, and I truly think people don't really appreciate what is going on, what's being built here. So how we usually transact with central exchanges, or you could like provide liquidity 50-50, it's symmetrical, and there's a lot of impermanent loss risk, and the bottom line is people want to park their money in something safe, but at the same time they don't really have any good options because of one, impermanent loss, and number two, if you wanted to day trade this stuff, like you can, but people are emotional. Number one, you're not available 24/7 to kind of give you that opportunity to do something like that. But LPX kind of changes this now. So I stated in my previous video when I briefly went over LPX that it was a single-sided liquidity staking machine where you deposit a token that you want to accumulate. So in my case, I have two positions open, but you have a bunch of different tickers here, as you can see. The ink die pool is what I started out with, and then I actually just recently opened up a hex pool. Now the hex and hex pool is a little tricky because those are not going to really pull away from each other too much. So you may not get too much volatility with something like that, even though it has already paid me some yield with that. But that's a safer play. And also with hex and hex, I don't really care which one I accumulate, because I'm sure that if I wanted to flip-flop back and forth and sell whatever token I had a surplus of, I'd probably get the same amount, if not more. So the ink die pool is interesting because I've actually had that position open for about 30 days, so about a month. Yeah, about a month. So I'm looking at this from a numbers perspective, and so far it's been paying me 25.5% APY, and the PHEX EHEX pools so far has given me a 26.6% APY here. So these are the numbers right now. But if we want to dive into exactly what is going on with this platform, so if you're tired of holding your tokens, right? Everyone just holds, they sit on them, but put it to work, right? This is what that platform does. So you could put up your tokens up, and it'll buy and sell and try to accumulate more of the token that you actually have. Down here, you get pretty much all the figures, at least from my position, right? So you have my current divs, $12 a die and $3.85 a die, and then my if I was to withdraw the position, this is what it looks like here. So it's like a little over 10,000. So a little bit less than what I started with, but when you factor in the yield that's been withdrawn and the current yield, actually I'm at a surplus of ink of around 242. That means if I sell all the die, then I'll probably get I'll get 11,000 back. So it's doing its work. It's accumulating more of the token. I want more ink. It's doing it for me, right? And the hex hex pool, same thing, right? I have some yield to claim here. Not that much, but I just opened it up. I think it was yesterday. And the totals here, and I pretty much input it into this sheet, and it kind of just spits out all the data for me as is. So yes, I'm losing a little bit of the PX, but it's accumulating the EHEX, and when you factor in the variance value for what I'm accumulating to what I'm losing, I'm still in the plus anyway. And if I was to sell, my PHEX standings would be around 395, so a little bit less, 30,000 less than where I started with. But when you factor everything else, the yield over a certain period of time comes out to 26%. So that's it's not bad. I'm personally really interested in when they start offering more options and give you more flexibility. So another reason why this is a good thing, and I think it's not really a get in first, get rich quick thing, or get in early scheme with a lot of other liquidity tools that are out there, because when you provide a traditional symmetrical exchange, when you provide liquidity, your position does matter, and the more people that funnel in kills your APY over time. Now with this, because it's a managed pool, and like I said earlier, I'm not sure if it's automated or not, but the execution of these trades adjusts as the total value that's locked, the TVL, starts to go up. So it's relative in that way. So it's not about whether you're early, it's not whether by you're late. It's really about what your risk is, and the APY will stay consistent across the board. So that's something that's really intriguing for someone. We all had PTSD, like, oh, is it too late? Is it too early? Everyone had that hesitation. And I think that's not the case here. So it's always good to have that knowledge available to you, because it's something that I'm going to keep parking money into this until it tells me otherwise. And right now it's telling me to, keep slow, start slow, but start building up. The more you see, more success with that. And, it's something to look into. And I'm going to keep documenting my journey on this whole project, because they have a lot of things coming down the pipeline. The other thing that I want to discuss is Validator X. Now, this is, if you are unfamiliar with pool validating, you validate the network. So a lot of people, especially on ETH, I believe there was, they had a couple different protocols where you could, stake on a network, and it's very expensive if you want to be a solo validator on ETH. The 32 ETH is a shitload of money, right? Well, they kind of improvised a little bit, you're able to pool share, and that's kind of what this is for Pulse Chain, where you could, deposit any amount of Pulse Chain, and then you could just lock it up. I mean, if you're in Pulse Chain, and I'll explain to you why in a sec. If you're in Pulse Chain and you have just Pulse sitting in your wallet, I think it's time to give this look, because it's not doing anything, right? You're carrying the same risk keeping it in this pool versus in your wallet. So just get your thumb out of your ass and just look into something like this, because this is something incredibly valuable. You just park your PLS, and as I stated in my previous video, you'll earn a share of the rewards in the pool. And I don't want to say there's no risk, because nothing's 100% no risk, but the risk that comes with this is really, validators that are misbehaving, whether it's they're double signing or going offline, so you get slashing penalties and stuff like that. But that's very rare, and that's spread across everyone in the pool anyway. So, I mean, there's a lot of, if you're looking for something safe in crypto, this is as safe as it gets, right? And pretty much how it works is you're going to deposit your Pulse chain, and you're going to get a derivative UPulse, and that UPulse is a representation of your share of the Pulse that you can redeem. So there's a rate here, 1.15 Pulse it costs to get UPulse. And this rate goes up every day. If you look down here, I think this is like 1.15. So it started out, this is like 1 week of activity, but, obviously it's going to go a lot higher. And I think that going forward, that'll keep going up. So the longer you hold it, the more Pulse you'll be able to redeem and return, right? So I want to go over some basic information, because it looks like there's a lot of shit here, but it's really not that complicated. We'll go over it, one by one, at least the important stuff, right? So there's a total of 4,025 validators currently participating in a network, mining this Pulse chain, whatever, and, no validators are exiting. I'll explain what that is in a second. We'll skip that for now. And then the instant withdrawal. This is kind of like where you need to kind of realize what these are and what this information is. So the instant withdrawal, there's about, there's no commas, but it looks like 1 billion. Yeah, 1 billion. There's 1 billion that's available for instant withdrawal. What that is let's say you have 1,032,000,000 pulse locked in. So obviously, because the amount is more than what's available to be instantly withdrawal, you have to wait until a validator exits. And because the surplus is 32 million pulse, because each validator is 32 million pulse, you have to wait for one validator to exit. And then once you execute that and it goes through, you'll see one validator waiting to exit. And that takes like maybe 1 to 3 days. I mean, I haven't had too much experience with that, waiting for validators to exit. I haven't pulled anything out. But at the same time, that's what you're looking at. So that explains that. And then you have like the address of the UPulse address. So if you wanted to add it to your wallet, you could look at that. And but that's pretty much it. You just need to know how many validators are exit. So whether you're going to be waiting for your tokens, if there's inefficient amount of tokens for you to withdraw, if that number is, if the instant withdrawal I say is negative, which I think it could be, because if there's a large sum, then it has to you have to wait for validators to exit. But it kind of gives you a little information on that. Another big component in the pipeline with LPX is this UDEX, obviously the zero for exchange, and the loan. So you'll be able to collateralize PLS and mint USDL. And that's coming down soon. I was talking to a few folks in the Telegram chat, and they said that this is actually pretty close. So when that comes out, we'll have more information going forward, right? So this is a really, really unique tool, because taking out a loan against your collateral is this is how the big boys do it. This is how the people on Wall Street do it. This is how everybody does it. You don't want to have that feeling of selling and you have that regret, like, oh, if the price goes higher, like I just screwed myself, I fucked myself, like whatever. But when you actually take out a low risk loan, because there is some risk that comes with taking out a loan, because if your collateral drops too low, I think it's like 110%, you could risk liquidation, and no one wants that. But don't get overzealous, but when the time comes, you could borrow against it. And right now is actually the perfect time to take out a loan, because when crypto's in the dirt for so long, any kind of pump is just gonna, expand your collateralized ratio even further, which de-risks you naturally. You could take out more money and, use it to keep investing. Like I said, that's how the big boys do it, right? But let's take a look at the chat. H-Man, thanks for the content. Of course, I'll try to bring more content going forward. Like I said, I'm a brand new streamer. I'm new to this whole game, so I'm just going to try to fine-tune whatever I can. Any feedback on something you'd want to change going forward, or something that you prefer, just let me know, and I'll try to get to that, because I want to bring valuable information, especially in this community, and I think that it's really needed. So thank you for tuning in. So yeah, this is something, a very low risk play here, and even single-sided liquidity providing is a very low risk strategy for me. So I think that these things you should really be eyeballing. And like I said, the data is the data. This is like the numbers right now. And, no funny business. I'm not trying to bullshit you, blow smoke up your ass. I'm like, hey, this is the best thing since sliced bread, 90% APY. I'm not trying to do any of that. I'm just breaking down the numbers for you, like here they are, right? So it's profitable for me, and, I've had a long, so far a 30-day pool and also a 3-day pool. It's an automated market maker doing its work for you. You don't have to be present. All you got to do is really claim your yield every now and then for what you do with that is your decision. But aside from that, I think that everyone should really take a look at what this is doing, because we have a lot of tools over the last, I would say, if you want to say 2017, right? And you could say that, the TradFi is slowly making its way in crypto. We had the fiat protocol, which was the lending and borrowing. We had liquid loans, which is the collateralized debt positions that we had. And then we had HEX, which was the CD. You had FAME, which was the derivatives and synthetics. You had a bunch of different protocols. So this, crypto is evolving, and it's starting to incorporate a lot of what's going on in the real world into our world. And I think we should take advantage of this, because I think when the bull run really comes back and the markets are more optimistic, people are going to look for tools like this, because like I said, people don't, buy and sell. The big boys don't buy and sell. They use their funds and put them to work just like everybody else. So that's what I'm going to be doing. But with that being said, there is a disclaimer. Disclaimer time. This channel is a source for cryptocurrency entertainment only. Please do not mistake my sarcasm for investment advice unless you want to get absolutely destroyed. I'm not a financial advisor, so please keep your expectations in check. You literally can lose all of your money and get annihilated in an instant. We are all snowflakes, and we have our own opinions because we're all special. Please consult with a financial advisor for guidance on how to invest and manage your own funds. Think of cryptocurrency like that friend who always promises to pay you back, but conveniently forgets every time. All right, now that that's out of the way, I want to take a look at Twitter a little bit. It looks like Crypto Tonight Show is doing something, but I actually had, I wanted to go into a couple of things. By the way, Fast Abdul, he's a really good guy, and he had such a great take on ProveX. We could actually take a look at what ProveX is doing as we speak. But he had a great take of like how ProveX could be incorporated in the future, and we'll get to that post in a second because I think it's really interesting. So the ProveX sacrifice right now, it looks like we got about 22 hours and 30 minutes till the next rate hike. We're on day 35, so this curve is gonna, start making a climb even more. I think the total sacrifices has gone down since obviously the rate is obviously a little bit worse now, so you're going to see less and less people trickle in. But it looks like the total will probably land, in the $16 to $17 million range, which is, an undershot if you ask Richard Hart. I'm sure he probably expected a lot more, but maybe that was because he included the core coins in the sacrifice. But at the same time, it could be PTSD from people that were burned by Pulse Chain and PulseX. So, can you change the prices? Yeah, no problem. I'll work on that. So yeah, he kind of really. I don't want to say that he didn't really expect this. I think he expected, definitely nothing like what we saw with Pulse Chain and PulseX. I think he didn't expect that to really get into that, but at the same time, I'm sure he's probably disappointed to some extent. So, but we'll take a look at Twitter, some Pulse Chain top news to see what's going on. There wasn't really much. I actually wanted to get to Fast Abdul's post because he had a great take on ProveX. So let's get to his post. It's probably done. He posted it a few days ago. Let's see. Here we go. I think this is it. So he posted this. It had to been like a week ago. Oh no, this is something else. Where was his post anyway? Where's his alpha post? Was this it? Yeah, this could be it. Yeah, this is the one. So he was saying that, could crypto ever be supported by real subscriptions like the kind you use every day with YouTube, X, Amazon Prime, Spotify, Adobe? And he's right. Right now the answer is no. We can't really do any of that because a lot needs to get integrated for that to happen. So yeah, we can't, authorize recurring charges, can't send payments, succeeded webhooks, can't give Web 2 companies the trust signals they require, but ProveX might change that. And then he goes into, how, right? So Web 2 companies don't just need payment, they need proof, cryptographically trusted receipt to identify continuity and automated verification. Visa and PayPal handle this today, crypto doesn't. And then ProveX to kind of link those together. So the servers to sign the data is already in the background. ProveX turns hidden signatures into proofs the blockchain can verify without exposing private info. So, this could give Web2 platforms verified payment receipts, identity, continuity without doxing, cancelable or revocable authorizations, server-to-server payment verification, zero-knowledge fraud signals, exactly what subscription companies need. The REKT subscription wallet obviously does not exist yet because you kind of need that layer of authorizing future signatures, which is kind of what I was, in the back of my head, I was thinking that too. And also, Richard Hart has been hinting at a wallet, and he's batting 100 for things he says he was going to launch that he wanted to. So don't be surprised if that's coming. And there's another sacrifice. So, and then he kind of puts it, holistically. Imagine that it lets you pre-authorize monthly payments, auto send funds from your balance, and produce a ProveX receipt each time. Lets Web2 verifies payments through a simple API and keeps you in full custody. No Visa, no banks, no chargebacks, so you're in complete control. And then a theoretic example, he breaks down YouTube wallet sends $15, so a user like one of you guys, ProveX proves it, YouTube auto renews, and with X, payment executes, a cryptographic receipt is generated, X verifies instantly, and then with Amazon, the same thing. And then why this does matter, why it could take a next step forward, in the evolution of crypto. Well, you're going to onboard millions of users, obviously, billions of subscription volume, massive stablecoin demand, Pulse gets powerful new narrative, crypto enters real commerce, which is obviously the end goal, right? That's what we all want. That's what makes the prices go up. That's what makes us happy, not miserable. So I think that such a great take, and it's going to be interesting going forward to see exactly what will happen and how ProveX will be incorporated into the crypto ecosystem overall. So, it's worth taking a look at this post if you don't follow him. And aside from all of that, I don't really have much else. Like I said, I didn't want this to be a long stream, but I did want to go over, something that caught my eye, a few months ago. And I think that overall, if you have tokens that are just sitting in your wallet collecting dust, take a look at this. I think I put the link to the Telegram and the website in the description of this video. Take a look. They even have a document section up here. So if you're curious, and if I explained it like shit, you could probably go over in this section, and it'll kind of go over a lot of the stuff that I missed. As far as with the validator X, and then you could even track the automated market maker when it's making your trades on the LPX dashboard. So take a peek. Let me know what you think. If it's something that works for you, let me know. I'm going to continue, providing updates on exactly what my yield and my returns and my APY is looking like. But, the proof is in the pudding for me. I like digging into the numbers. I like hashing it out with that and, to kind of put my story together. So with that being said, I don't have much else to discuss today. I hope you enjoyed, and I hope you had at least took some value from this content. I'll try to make it a consistent thing, going over LPX and what's going on, especially when I hear any updates on the options for the LPX, where they're adding more options and solo validating and all that kind of stuff. So I think that going forward, I'll provide more updates with that. But with that, I hope that if you do like this content, support the channel, like, comment, any kind of feedback is greatly appreciated, because I'm new and I want to learn on what I can do to be successful, especially bringing valuable content to you. So I hope you have a great night. Take care, and obviously don't get wrecked in such a crazy market, because it's rough out there. But stay safe, and don't do what I don't.